to be wanted for questioning over election campaign spending. NHK says prosecutors are looking at publicly financed so-called cherry blossom parties and whether they broke financing laws. Last month, Yomiuri said some of his aides had been questioned about parties organized over the last 10 years. Abe stepped down in September and denies any wrongdoing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Heidi.
Karina, we have some breaking news when it comes to the former Huawei CFO, Meng Wanzhou. The U.S. Justice Department is currently reportedly discussing a deal with Huawei Technologies financial chief Meng Wanzhou that would potentially allow her to return home to China from where she's being detained in Canada in exchange for admitting wrongdoing in a criminal case. This, of course, has played out in a very big way in terms of the relationship between Washington and Beijing and the scrutiny over Chinese tech. This is according to people familiar with the matter, and according to a Dow Jones report as well. Lawyers for Ms. Meng, who of course faces wire and bank fraud charges related to alleged violations of U.S. sanctions on Iran when she was acting on Huawei's behalf. These lawyers saying that they're talking about the possibility in recent weeks of reaching a deferred prosecution agreement, and that would mean prosecutors would essentially require her to admit to some of the allegations but potentially defer and drop other charges at a later date. So we'll continue to watch that breaking news, a report suggesting that the US is in talks with Huawei's Meng Wanzhou, the CFO, to resolve those charges so that she can return home to China. Let's get your check of the markets in the meantime. Sophie Cameron in Hong Kong. Soph.
Heidi, markets taking stock of the Pfizer production shortfall that has been reported, taking it in stride. As you can see, S&P minis up by 0.2%, and the ASX 200 headed for a fourth day of gains, while the banks gaining ground, and Treasury wine rising nearly 7% this morning. This after China indicated the current tariffs on Australian wines are temporary, and we do have the resource players heading lower in Sydney. Gold miners under pressure, with bullion holding onto a 3-day gain. When it comes to Tokyo, you have Nikkei futures in Singapore just opening to the downside. This perhaps as we digest news that Osaka has raised its virus alert level to the highest level. Now, flipping the board, we're seeing little in the way of price action in the currency corner, looking pretty much flat. This as the dollar is holding around levels last seen in April 2018. But we do have some risk-off sentiment being reflected in the strength of the Swissy as well as the yen. And check out cable holding steady this morning after breaching 135 overnight, trading near a December 2019 high, and the offshore yuan could be headed to that 650 level, just holding on to a 3-day advance. So we're keeping an eye on the Aussie dollar, which is near a 2.5-year high at 74.42 this morning. That next major technical resistance for the AUD will be at 76.77. Strength coming through for the currency, given the lift we've seen in commodity prices this week, including iron ore as well as oil, Sherry.
Yeah, and oil continues to gain ground. WTI now above $45 a barrel. This as OPEC Plus has agreed to ease its oil output cuts next year more gradually than originally planned, wrapping up days of tense negotiations. The tapering falls short of the full 3-month delay that was expected, but will ease supply pressure on the market. The compromise also avoids a breakdown of OPEC Plus unity after new rifts were exposed. Let's get more on this from Deputy Managing Editor for Energy and Commodities, Simon Casey. Simon, so it was short of expectations, but at least we're getting a monthly meeting where they will continue to assess where they're at.
That's right, and to be clear, it's not a complete rollover, but again, it's a gradual tapering. And what could have been the nightmare scenario for the oil market was that there was no agreement, and then the full 2 million barrels a day came back on in January, which could have crashed prices.
So, Simon, where to from here? And I'm actually quite curious, at the levels that the market is looking at the moment, is US shale still a relevant threat?
It's much less of a threat than it was. I mean, essentially, this year has been pretty traumatic for American shale in particular. It has higher costs overall than a lot of OPEC players, like certainly Saudi Arabia and other producers in the Middle East. And producers in the US just don't make money by and large domestically at these levels. There's maybe a few shale producers at the fringe. They've seen massive bankruptcies. They've had to curtail production involuntarily. They have turned inward, essentially. Production in the US is much lower, and all forecasts point to 2021, where shale production will be flat at best, unless we see some sort of unforeseen run-up in the oil price. But barring some sort of black swan event like that, I mean, we're going to see shale producers continue to doing what they're doing now, which is focusing on their investors, trying to improve cash flow and returns to those investors, trying to address some of the corporate governance concerns that have been raised. And really, they're not looking as outward as they used to do. They've lost a lot of their swagger. And, they didn't really feature so much in this most recent OPEC meeting, which was much more concerned about the members themselves and how they are managing their production.
All right, our Deputy Managing Editor for Energy and Commodities, Simon Casey. A bit of a break for the oil market with that deal finally reached by OPEC+. All right, let's get you the latest when it comes to this breaking news on Huawei's CFO, Meng Wanzhou. We are hearing reports from the Dow Jones that the US is in talks with Meng Wanzhou to resolve these charges of wire and bank fraud in relation to alleged violations of US sanctions on Iran. This means that the US Justice Department is reportedly talking about this deal that would potentially allow her to return home to China from Canada. In exchange, she would have to admit to wrongdoing in a criminal case. Potentially, that would also mean that later on, some of these charges would be deferred and potentially later dropped altogether. So we do hear that these talks have been ongoing for the past few weeks, but that Ms. Meng has so far resisted the proposed deal, still saying that she believed that she did nothing wrong, according to people familiar with the situation. Well, plenty more to come on Daybreak Asia. This is Bloomberg. This week's edition of Bloomberg Equality, we're shining the spotlight on efforts to step up diversity in Silicon Valley. Joining us today is Reshma Saujani, the founder and CEO of Girls Who Code, an international nonprofit working to close the gender gap in tech. Reshma, great to have you with us. Of course, it's very widely known and widely talked about that there has been a huge gender gap when it comes to tech, barriers for women in this business, especially when it comes to those leadership roles. How has COVID-19 affected the landscape now?
It's exacerbated it. As we know, almost 1.6 million mothers have left the labor force. 8 out of 10 of them say it's because they're homeschooling at home. And what I've heard from tech company after tech company is their most senior women are leaving. And you cannot be what you cannot see. So when young women enter the technology workforce and they don't see themselves, in the leadership at the top, they don't think that there's a place for them. And so I think it's having a huge effect. On the other end, almost about 30% of our Girls Who Code alumni told me that they either got their internships or their full-time offers reneged. So as companies are making cuts And as they are, making unfortunate, a lot of those cuts are